Hey everyone, welcome back. Today, we're diving deep into something that's been making headlines. The Canadian dollar, the loonie.
Oh, yeah, it's been having a rough time lately.
It has, and we're going to figure out exactly why with help from an article by Fergal Smith over at Reuters.
Sounds interesting.
It is,
Yeah.
especially with all the talk about U.S. economic policies and how they might be impacting things up north.
Yeah, bond yields and all that.
Exactly. So, to kick things off, the article mentions that the loonie hit a two-year low against the U.S. dollar.
A 2-year low, huh?
Yeah. It reached 1.3945 to the US dollar, weakest since October 2022.
That's pretty significant. Is this a loony specific thing or is something else going on?
Well, that's what's interesting. It seems the loonie isn't alone in this. The article actually explains that the US dollar is strengthening against most major currencies.
Like globally.
Yeah, those in the what they call the G10 group.
Ah, right, the G10, the big players.
So it's like everyone's kind of looking at the US dollar and going, ooh, shiny.
Uh-huh. In a way, yeah. But why though? What's making the US dollar so attractive all of a sudden?
Well, the article brings up the incoming Trump administration and the potential for some big changes in U.S. economic policy.
Oh, right, the new administration.
There's a quote from Almo Sahota, director of Clarity FX, who says import tariffs could be a big factor in this whole dollar strength thing.
Import tariffs. How would those affect things?
Well, I'm not an economist, but the way I understand it is if you're a business owner and your imported supplies suddenly get more expensive because of tariffs, you got to raise your prices, right?
Right, to cover costs.
And when that happens on a bigger scale, it can contribute to inflation.
Makes sense. Prices go up across the board.
So how does this all tie back to a stronger U.S. dollar?
Well, when people are worried about inflation eating away at their savings, they tend to flock to currencies that they think will hold their value better.
Currency is seen as more stable.
Exactly. And right now, the US dollar is looking like a pretty safe haven.
Interesting. Okay, but there's this one thing in the article that I found kind of surprising.
What's that?
It says the loonie's decline, while significant, hasn't been as bad as some other G10 currencies.
Huh. That is surprising.
So there must be something giving the loonie a little bit of a buffer.
Could be. You know what? The article mentions Canada's energy sector. They don't seem as worried about these potential U.S. tariffs.
Well, because the U.S. needs Canadian oil, right?
Precisely. Those American refineries depend on it.
So maybe this reliance on Canadian energy is keeping the loonie from completely bottoming out.
Yeah, it's possible. The energy sector might be a little insulated from the wider currency fluctuations, at least for now. It just shows how, even within these big global trends, different industries can be affected in different ways.
That makes sense. Now, the article also mentions some labor disputes at Canadian ports.
Oh, right. Vancouver and Montreal, I think.
Yeah, but those were actually resolved pretty recently. The government stepped in and cited concerns about economic damage and potential harm to, trade relationships.
Yeah, disruptions like that can really ripple out. Shows how vital those ports are for Canada's economy.
For sure. Okay, ready for some talk about bond yields?
Hit me with it.
All right, so the article says Canada's 10-year bond yield recently rose. I thought higher bond yields were usually a good sign.
They can be. Think of bond yields like interest rates on savings accounts. When yields are higher, it means there's more perceived risk or higher demand, makes those bonds more attractive.
So higher yields, good, but
Yeah.
I feel like there's a but coming.
You got it. While Canada's 10-year bond yield did go up, the gap between it and the U.S. 10-year bond yield widened. Meaning, if you've got two savings accounts, one offering 3% interest and the other offering 5%, you're going to go for the higher return.
Naturally. So even though Canadian bond yields rose, the U.S. yields were even more appealing to investors.
Yep.
And that what pushes the loonie down further.
You got it. The article even quotes Amos Sahota again, saying, "The widening yield spread is hard to argue against and will keep the loonie on the ropes."
Wow, this is like a whole tangled web of factors.
It really is. U.S. economic policies, bond yields, Canada's energy sector, it's a reminder of how complex and interconnected the global economy is.
So what's the key takeaway for our listeners here?
Yeah.
What should they be watching out for as all this plays out?
That's a great question. I think the big question is, what do these economic and political changes mean for Canada in the long run?
Yeah, like, will the loonie continue to struggle?
Possibly. And if it does, what does that mean for Canadian businesses and, for everyday Canadians? What does it mean for your personal finances?
Those are definitely things to consider.
Definitely.
Well, thank you for breaking all this down for us. It's been Really insightful.
Happy to do it.
And to everyone listening, keep your eyes peeled. This stuff is always changing, and the more you understand, the better prepared you'll be. Until next time, everyone.